I'm building a $10,000 Robinhood portfolio, and this is day 29. If you are new to the channel, for the past month, I started a $1,000 Robinhood portfolio, and I've been adding $250 to it every single week to give a realistic example of what it looks like for the everyday person to invest in the stock market, how simple it can actually be, and to show most importantly that you don't have to worry about timing the market, trading stocks. Just consistent investing over a long period of time can build you a 5-figure portfolio. And as we jump in this video, the current value of the portfolio is $1,747.36, but let's go ahead and add our $250 contribution for the week. And now that we have that transferred, the current value of the portfolio is $1,997.36, and let's take a look at how we fared overall throughout the duration of this challenge. If we look at the one-day chart, it is pretty early in the morning on a Monday, and we are currently already up $15 on the day. I was a little bit surprised when I opened the portfolio this morning and I saw that we were close to $2,000, because as I was glancing at it over the past week, the portfolio was on a pretty steady downtrend. And you can see that on the week graph, as we look, we got all the way down to $1,974, or about a $30 loss. And then there was a bit of a recovery over the past week, but I mainly noticed that we were right around down $14 or $15 for the duration of the week. And as you can see, as of Monday morning, we are getting a little bit more of a push. If we look over the course of the overall challenge, it has definitely been a volatile portfolio. And for me, in this investment strategy personally, I don't try to invest in volatile stocks. As mentioned in past videos, I put 90% of the money in this portfolio in index funds and the other 10% in blue chip stocks. So the volatility that you see in this portfolio is mainly from overall market swings rather than attributed to my personal selection of individual stocks. And you'll see that when I go through the individual stock positions, because when compared to the index funds, those positions are actually very small. Then on the month, the portfolio saw a peak at around August 31st at $2,012, and the lowest it's been is down 1.74%, or down $35. The 3-month chart won't show much information, but it does show the amount of money that we overall contributed, which is $2,001 to date. And as of right now, we're down $3.57. Looking at the year to date, it's more of the same. We had a few rewards when we first opened the account back in January, but then after that, it flatlines, and you can see a little bit more of that reward stock value on the 1-year chart, and the all-time chart is what we want to see the biggest growth in. But as of right now, you can't see much information because we started the challenge so soon ago. But as you can see right here in the middle, we now have $250 worth of buying power. So let's take a look at the performance of the individual stock so that we can put this uninvested cash to good use. Now, I actually have a little bit of a different idea with this uninvested cash today, and I'm not just going to start off investing in VOO or the S&P 500 index fund today. Even though I said in my last video that I wasn't going to be adding any more to Bitcoin, what I actually want to do is put a little bit more money into another meme coin. So as we take a look at the first Bitcoin position, it isn't all that crazy at all. We bought in with $50 when the price was $29,534. As we can see, the price right now is $25,600, so it definitely has dropped a good bit. And how much exactly? From the time we bought it, it dropped in value by 13.24%, or about $6.62. But this position overall only makes up 2.48% of the portfolio, so I'm not necessarily too concerned about the drop in value. This crypto position and the next crypto position that I'm going to buy is mainly for entertainment purposes, just so I see how it performs personally, and you can make that decision of whether you want to add it to your portfolio at your own discretion. But for crypto, I do want to add $25 worth of Dogecoin into the portfolio. I sort of had this idea on the fly, and if I haven't mentioned already, I am not a financial advisor. This video is just for entertainment purposes, so take everything that I do with a grain of salt. But we just completed that order for $25. We bought 413 Dogecoin at an average price of 0.06 cent, and if we take a look at the 3-month chart, it has had highs of 0.8 cent, and now it's pretty much at a 3-month low, which could mean that it's a good deal to buy, but my decision to buy it doesn't have to influence your decision to buy it. However, as we go into some more legitimate positions in this portfolio, the first and largest position that we hold is the S&P 500 index fund, and in this index fund, we hold about 2.45 shares with a market value at $1,011.31. It makes up about 57% of the portfolio right now, but what I'm going to go ahead and do is add another $175 worth of this into the portfolio, and since the market is open right now, it should automatically go through, which it did, and now our average cost is $409.83, with it making up about 61% of the overall portfolio. And overall on this position, we're only up $4.23, or about 0.36%, and this position is mainly going to be driving the overall performance of the portfolio. With it making up over 60%, whatever the overall market does will reflect what my portfolio does. But if we go into our second largest position, which is the Vanguard Total International Stock ETF, which is basically everything outside of the United States, it currently makes up 22% of our portfolio with a market value of $431.83. But I do want to go ahead and add $25 more of this into the portfolio, which will add another 0.5 shares. This won't go through until the market opens, and as of right now it's 724, so we'll have to check back next time once that fulfills. But as of right now, this position is down about 0.5%, 1%, with it being up almost 2% on the day. And now moving forward into the individual stock positions, the first individual stock that we hold is a small position in Tesla. We have about 2% of our portfolio in Tesla. This actually has a total return of 8.68%, with it being up 6% on the day. If we take a look at the week chart, we can see that Tesla on the day has had a huge spike, and it will be interesting to see if it holds above this line throughout the day. Usually when you see a stock take a huge spike like this, it tends to see a rejection or a downtrend shortly after you have that big push. So I'll keep an eye on this throughout the day just to see what it does, not to say that I'm going to trade it or anything. Moving forward, we now have about $56 worth of Apple. Apple is up 2% overall and 1.36% on the day. It also has a push on the day as well, but not anything as aggressive as Tesla have. If we go out to the month chart, we can see that a lot of these individual stocks saw a big decline around the beginning of September, and now a lot of them are just working on recovering. Our Apple position is closer to 3% of the portfolio, and I would like this to be at 2 or below, so I'm not going to be adding any more money into Apple for the time being. Our next individual stock position is Walmart. Walmart currently isn't updated on Robinhood because it's before market open, but overall on Walmart we have a 3% gain on our $50 position, and overall on the past month it has been seeing a steady increase from its decline around the middle of August. Moving forward into Disney, this is actually our biggest loser besides Bitcoin. We can see that Disney has had a steady decline over the past month with no signs of recovery just yet, and on Disney is 2.62% of the portfolio. We are down 7.1% on it, or down almost $4, and as right now it could be a good opportunity to add more into it while it's on discount, but I'm going to stay a little bit away from it as of right now. We also have a small Coca-Cola position that's down 3.73%. It's only about $30, but you can see that it has been declining as well. And now our last individual stock position, which has also been on a decline, is Realty Income, a REIT that pays monthly dividends, and it makes up about 1.52% of our portfolio. And just like Disney, I feel that because this has been on a decline in the past month or so, I think that it's a little bit of a better deal to add just a little bit more of it into the portfolio and to be able to get more shares and more dividend income for a lower price. So I'm just going to queue $20 more of Realty Income whenever the market opens, just so I can add another quarter of a third share into the portfolio. But as we do a quick summary, we can see that most of the individual stock positions has been on a really big decline in the past month, and if we look at VOO, we were able to capture some of the recovery of the stock market that we wouldn't have seen if we had picked individual stocks that didn't recover. This is literally the beauty of investing in index funds. You don't have to worry about picking the right stocks or which one will recover. If you invest in the overall market and there's one sector downtrends, the other sector uptrends, you will be taking advantage of the overall market. So you definitely don't have to take this same investing style that I do. Like I said, this is mainly supposed to be for an everyday investor who's looking to invest over the long term and not necessarily try to trade to make more profits. So if you find value in this video, then hit that subscribe button, as I do make more videos about investing, personal finance, and side hustles. If you do decide to subscribe and join the community, then I will see you in the next one, guys.